I'd like to welcome everyone to the first and hopefully the last virtual State of the Industry update that we will do. We thought it was a good opportunity to give you a look at what 2020 did for our industry and how things fared out. So Rebecca, if you could move to the next slide, please. So I'm going to give you just a few slides on sort of NMMA Canada 2020 in review, pre and post COVID. So beginning with our export promotion program, my first and last international trip of 2020 was to the Dusseldorf Boat Show with a trade delegation supported again by the federal government and international trade. So we are here with Mustang Survival and Shockwave Seats and the Trade Commissioner to the Canadian Embassy. We also did a great event end of 2019 where we had a ribbon cutting ceremony with the Trade Commissioner from the Canadian Embassy in the Netherlands at Metz. Again, a very successful and sold out show. So pre-COVID, we were approved for an export promotion grant for 2020-21. Unfortunately, as we all know, that did not proceed. So we have applied again for 21, and we'll be able to use some of the 2020 money that we were approved towards 2021 for Metz, which is fantastic. Move on to the next slide, Rebecca. Just a little fun here, as we all have so many Zoom photos. One of our former board members, David Jones, sent this picture to me pointing out my little square there. So this was the virtual Metz Trade Connect from November of 2020, where we all had a Heineken together virtually. So I guess we try to make the best of times. They did a fantastic event. They put in a fantastic event together. And also, I wanted just to remind all of you of my involvement with ICOMIA as the newly elected president for the next 2-year term. This is a great opportunity for NMMA Canada and NMMA North America and overall, and also an amazing opportunity for all of our members. We're going to get a lot of profile by having me at that table and bringing great ideas back to Canada and learning from all across the world. Next slide. I continue to grow through our involvement with the other recreation industry associations. We created the Canadian Outdoor Recreation Roundtable a couple of years ago, and we've made some good headways in 2020 despite what happened. We were again had an article in the Hill Times in Ottawa talking about infrastructure and the need for outdoor recreation infrastructure. So we've also been, sending a lot of letters to Ottawa on various topics of importance during the COVID times, whether it was relief for dealers when we weren't sure how the season was going to pan out, or writing to the Minister of the Environment on, promoting tourism in our parks. Next slide, please. Early in February, I had the opportunity to sponsor the Parliamentary Outdoor Caucus Breakfast, which allowed a great opportunity to get in front of probably about 15 members of Parliament from all parties at the event, and I was able to speak on the luxury tax. So it was a great opportunity. Cam Taylor from Outdoor Smart, one of our board members, participated with me, and we met a lot of members of Parliament and got some great feedback for them and support on opposition to the luxury tax. Next slide. And then, of course, as we all know, we've told you this before, we moved our Day on the Hill up to the end of February and managed to get in front of dozens of MPs, departmental staff, and minister's office staff to talk about how horrible the luxury tax, if imposed, would have been on our industry. I believe we have had success from that day. I think it was the last day of February, and a huge snowstorm. I think half of us didn't make it back on our flights or drives back due to the snowstorm. But as we stand today, the new mandate letter from the Prime Minister to the Minister of Finance no longer mentions the luxury tax. So while we're not completely out of the woods, I'm optimistic that the fact that that has been removed from the mandate should mean that we're in good place. Next slide, please. We also wrote to the Prime Minister. So our US President, Frank Hugelmeyer, and I wrote a joint letter to the Prime Minister and the President when we saw rumblings again that there might be aluminum and steel tariffs imposed by the US on Canada. We thought we would be proactive. And I was very pleased to see that the Prime Minister did respond to our letter. I know it's hard for you to see what's on the screen there, but it is signed by the Prime Minister from his office. So I would say, again, that's a huge success for our industry to be recognized, and in often cases, responses don't come. So this is a huge success. Next slide, please. And of course, throughout 2020, there was a heck of a lot going on the advocacy front. We've met with new departmental staff at Transport Canada. We've met with members of Parliament after they were announced as shadow cabinet ministers to Transport Canada, and tourism, connecting with the leader of the opposition, Mr. O'Toole, and a number of other things that we did, dozens of letters on various topics to help the industry through the situation, engaging with the Ontario government on E15, and then most recently providing official comments with our Marine Trade Association partners on the changes to the pleasure craft licensing program and the rental safety checklist, which I believe has shown a lot of opposition from a lot of the industry. And we actually met with Stephanie Kuzi, the MP, Shadow Cabinet Minister to Transport, who said she'd been hearing a lot of concerns from her constituents and other MPs on this topic. So that remains to still be dealt with. Next slide, please. I think we're good. Okay, so actually now, oh yeah, thank you, Rebecca. So I want to share some statistics and what 2020 looked like. I will advise you that we do not have a ton of Transport Canada data to share with you. I hope everyone can see this slide, but it's a trajectory slide on the new boat sales upward trajectory that occurred in 2020. You can clearly see the dip there in March, April, May, and then the huge spike into the summer months and leveling off a little bit lower, but still quite significant in December. So this is, obviously what we've all been hearing and experiencing. Having said that, as a result of the flaws in the Transport Canada data that we identified probably about 12 to 18 months ago, we are not going to release any additional Transport Canada licensing information to you at this time until our statistics team has had a lot of time to really analyze it and cross-reference with the HIN numbers so we don't have any data flaws. So that will come out when we produce the statistical abstract later this spring. Next slide. We did use the Transport Canada data to look at Canadian buying behavior by province, and all I can say to you from this slide is that it's really not that different than past years. 19 to 20 or 17 or 16, we clearly see the same sort of ratios of Ontario being sort of the largest market, followed by Quebec, BC, and so on. So it's not really anything significant, but important to see that that didn't change. Next slide, please. There was a significant rise in interest. What we know from Transport Canada is that pleasure craft operator cards that were taken or written by the general population in Canada went up 73% over 2019. And you can see the significant spikes from April on right to December. So now here we are into the winter month, December, folks were taking their PCOC cards, getting ready, we think, for the 2021 season. So this is fantastic news. If we can turn this, significant rise in interest into 20%, more buying of boats, we're going to see some great results for 21. Next slide. So I thought I'd profile one of our members. Boatdealers.ca recently announced that they saw some significant spikes in their traffic on their website, an increase of 57% in unique Canadian visitors in 2020. So I think this is fantastic. It's 4.7 million visitors flocked to their site, with 2.4 million were unique visitors. So again, the interest is there. We know it through sales. We know it through people looking to do things closer to home. So I think this is also a positive for the industry. Next slide. We did a survey recently on Canadian consumer demographics, and we found that the first-time boat buyers are more likely to purchase pre-owned. For Canadians, it's 52% versus 42% in the US. They tend to be slightly older in Canada at 46.5 versus 44.5, not serious difference there. 84% are Caucasian in Canada versus 77% in the US. And the second largest ethnic group were Asians in Canada at 12% versus the US. So just some interesting demographics as we plan ahead. Next slide, please. We also looked at Canadian buying behavior, new versus pre-owned. Pretty much steady on type of boat. You're looking at, freshwater, cruiser is the same, pretty much the same. What's interesting is on the runabout, where it's about 5% of sales are in new runabout, whereas pre-owned was quite significantly higher at 12%. So that's an interesting look at more people interested in the pre-owned runabout. Next slide, please. Now, we do have strong data when it comes to engine sales because we track this at NMMA through our statistics department. So this is a look at outboard engine sales retail in 2020 by month. You can see the clear, massive drop between March and May, and then the massive swing upward from June until December. Next slide, please. Now, this is a look at the annual outboard engine retail sales compared to back to 2008. So what we're looking at here, seasonally adjusted, we're up about 14%. Unseasonally adjusted could be as high as 17. Next slide. We also collect the data internally for PwC, and this is a look at 2020, the drop again for March and April, and the spike, not huge, but a bit of a spike May, June, and you're going to be surprised and say, why is July to December the way it is? It's lack of inventory is the best that we can assume on that, considering how many people were looking to get in and into the sport and get a PwC. So that's why you'll see, next slide, go ahead, Rebecca, that the growth for 2020 seems low at 2%, but I think that's a direct reflection of the buying out on those peak months and then no inventory. Okay, I believe that's all the slides I have. I have one of the things, you won't find the first one as a surprise, but we do have a couple of surprises. First of all, as mentioned in the invitation, we are pleased to bring greetings from the Honorable Aaron O'Toole, Leader of the Official Opposition and Leader of the Conservative Party of Canada, which is fantastic that he sees the importance of our industry. And in fact, he, in the past, as many of you will recall, he was instrumental in helping us fight the tariffs and would call me on my cell phone, weeks on end to see what else he could do at the time when he was international critic. So a great friend to our industry. In addition, we're pleased to announce to you today, right after Mr. O'Toole speaks, that we also have greetings for all of you from Premier Doug Ford with the province of Ontario. So I'll just let them take it away. And Rebecca, if you could play the videos.
Hi there, it's Aaron O'Toole coming to you virtually from Ottawa. Canada is blessed with some of the most beautiful waterways in the world. It is important that we have a thriving industry that utilizes this gift, and I'm grateful for all the work you do to make that happen, especially in this very difficult year. Now, while our tourism sector has been one of the most heavily hit from the pandemic, some parts of the boating industry actually grew in the past year because as many Canadians were grounded, they realized just how incredible their own backyard was. And getting out on the water is such a fantastic way to enjoy this incredible country that we are truly lucky to live in. So I don't believe that the government should be looking to exploit your industry with more taxes. Rather, we should be focused on protecting the industry from protectionist policies in the United States that could disrupt your growth. I've been fighting against this, as many of you know, for many years. We need to ensure we don't have any disruptions to the manufacturing supply chain so we can keep this industry thriving. We need to make sure that we keep our waterways safe and clean as well, especially with all the new boating enthusiasts that have discovered boating just in the last year. And we need the federal regulations around licensing to stay simple to help fund a growing industry, especially as tourism opens up again and people from around the world want to enjoy the beauty of Canada. While Canada's boating industry has continued to thrive, I know this has still been a very difficult year for all of you, like it has been for everyone in Canada. I believe we can build a thriving, self-sufficient country with a bright future if we put our faith in Canadians and Canadian businesses to build it back stronger after this pandemic. That's why I'm fighting for a better recovery plan. I'm fighting for clarity and certainty around vaccines so that we don't miss another summer together. Many families got out on the water for the first time this year. It would be really great if we could start heading out with our friends as well. I have tremendous faith in you, your employees, and tremendous hope for our country. Let's get to work.
It's a real pleasure to join this year's National Marine Manufacturers Association of Canada Conference. First, I want to thank all of you for everything you do to strengthen Ontario's boating industry. Ontario government recognizes the important role the boating industry plays in the tourism sector and its many contributions to our economy and jobs. I know our tourism and recreation industries have been hit hard by COVID-19. Our government will continue to do everything we can to support you. We've set up the Ontario Small Business Support Grant to provide a minimum of $10,000 and all the way up to $20,000 to help with business costs. Our Minister of Heritage, Tourism, Sport and Culture Industries, Lisa MacLeod, is also working on a 5-year strategy plan to help the tourism and recreation industries recover and rebuild once the pandemic is over. We've also invested $100 million over 2 years in the Community Building Fund to support community tourism, culture, and sport and recreation organizations. As public health trends improve, I'm hopeful we can work together to plan for a safe and responsible reopening of the tourism sector and many other sectors, so businesses can grow and thrive once again. Thank you and enjoy the conference.
Okay, well, I can tell you on behalf of all of us at NMMA Canada who've spent all of us, the few of us that are here, it's a lot of work to work with politicians and you don't always get success. So I look at 2020 as the most challenging year for all of us, but yet we've had so many, political wins and exposure to government. And I think that's fantastic for the industry to continue to grow and deal through all that's been handed to us. So to have the Premier and the Leader of the Opposition here with us today remotely, I think is a huge success for us all and acknowledgement that we'll be able to continue working with them. I'd like to now turn it over to JF Ryu, Chairman of the NMMA Canada Board of Directors, to give some remarks and conduct our AGM.
Thank you, Sarah. Welcome, everybody. Good morning. I appreciate you joining our virtual event here today. So again, thank you, Sarah, for your government relations update and for bringing Mr. O'Toole and Premier Ford to our event. Definitely pleasant surprise and the most senior political officials that we've had spoken with us yet. So thank you for arranging that. I want to take the opportunity here to thank Wells Fargo Commercial Distribution Finance and Boating Industry Canada Newsweek for their continuous support of this important industry event. While this year is different for us all, we really appreciate your attendance once again this morning. Yes, as Sarah pointed out, 2020 was quite the year. Certainly started off with a lot of headwinds our way. The mandate letter to the finance minister mentioned a 10% luxury tax on boats, just as if previous 2 years weren't challenging enough with the tariffs. Here we are, being hit again in the target. But as Sarah outlined, it appears that we've won this battle as well. I know many of you online here participated and supported an NMA and Sarah on this, and I want to take this opportunity, to thank you. Your effort certainly have paid off, and please continue to engage with an NMMA. While many have struggled, we are so fortunate that our industry continues to thrive during this global crisis. And by offering a safe outdoor activities, the increase in demand has provided what we would call a reset, helping to clear inventory and address the pricing imbalance related to the tariffs. The great influx of new boaters will also fuel our industry for years to come, and that is if we treat them well, obviously. We've been propelled forward, I'd say, a decade in how we reach and engage customers. We needed to reinvent ourselves, rethink our digital strategy from our showrooms to our marketing. But we do expect a more challenging year ahead due to supply disruption and lack of inventory across all outdoor recreation industries. We don't want this to close the door forever for customers in 2021. So we need to manage their expectations with the utmost respect, have a strategy to continue to nurture the relationship, and look for unique ways to offer positive experiences. On that, now I'd like to ask you for your attention for a minute or so here to conduct the official annual general meeting business. A notice of the NMMA Canada AGM was given in writing on January 27, 2021. The minutes were circulated at that time, as was the nomination ballot for the board of directors. The following individuals are nominated for 2-year terms to serve on the NMMA Canada Board of Directors. And the first gentleman is Hab Ghazvani, Honda Canada, Alai Syed, Suzuki Canada, Bill Corner, Stanley Boats Corner Industry, Cameron Taylors from Outdoor Smart, Eric Fetko, Dometic, Christos Parkis, Smokacraft, Lorne Wiesel, Mustang Survival, Matthew Hill, Campion Boats, Michael Schwez, Duck Edge Canada, Metal Pacific, Patricia Carrera, Wells Fargo, Rodier Grandin, Princecraft Boats, Tracy Williams, TCF Financials Corporation, and myself. We have not received any further nominations since the written notice of January 27. Therefore, have a pre-approved slate of directors for a 2-year term. As such, we have a motion to accept by NMMA members Marc Duhamel, Legend Boats, and second by Cameron Taylor, Outdoor Smart. Now I'd like to remind you of the board of directors serving the second of their 2-year term. Alexandre Bourgeois, BRP, Chris Chapman, Volvo Penta Canada, Eric Nelson, Mercury Marine, Frank Hugo Mayer, NMMA US, Marc Duhamel, Legend Boats, and Richard Brown, Sidewind Marine. That concludes the AGM. Now I'd like to introduce our next speaker, Nick Bonenberg. Thank you very much for joining us again this year. Nick is a managing director and head of currency strategy for Wells Fargo Securities. Nick offers foreign exchange market analysis to help customers manage the risk and opportunities of operating and investing in these markets. In addition, Nick provides daily and monthly commentary foreign exchange markets through several Wells Fargo publications. He appears frequently on business television in media such as Bloomberg and CNBC, and his research is often quoted in financial publications such as the Wall Street Journal. Please join me in welcoming Nick. Nick, it's all yours.
Great. Thank you very much, and thank you for inviting me. And what I'd like to do today is to really just a quick economic summary of what's happening with the Canadian economy, a bit of a backdrop for the boating industry up there, and some of the prospects that we might see in 2021. So going to the next slide, please. If we look at 2020, of course, just like every other major economy in the world, we saw a dramatic collapse in activity early in the year as the COVID crisis struck. But so far, Canada has enjoyed an encouraging rebound. If you look at the sort of month-by-month changes in GDP, on a monthly basis, we've increased for the last 7 months in a row. And we've gotten back to, around about 2 to 3% below where we were, prior to the pandemic taking place. Now, that's particularly been in the service sector. As you can see there, the blue line has improved a little bit quicker than what we've seen in terms of the industrial sector. But nonetheless, an encouraging move so far. Now, if we go to the next slide, there is a little bit of uncertainty, unfortunately, in terms of the near-term outlook. And both ourselves and the Central Bank of Canada, for example, have been focused on some renewed increase in COVID cases across Canada, and some restrictions that have been put in place across various provinces such as Quebec and also Ontario, among others. So if one looks at the left-hand side here, it's a little tricky to tell, but there's a sort of a purplish line, and right at the end, you can see one line just pops up. You can see the effect of those restrictions coming into place in Canada, and that's going to weigh on activity in the short term. We can see this in some of the, not so much the GDP figures or the total economy figures, but we can see this in terms of the last couple of employment reports for December and January, where we have seen declines for a couple of months. And as I mentioned, with these restrictions in place, we're probably looking at a soft start to the year as far as Canada is concerned in 2021. I think what we would say is hopeful is if one compares the uptick in cases in Canada, it's relatively mild compared to some of the much sharper increases that we have seen in other important economies. So looking at the right-hand chart here, the low line that you see there is the Canadian uptick in cases to around about 200 cases per million over the past 7 days. And that's well below what we're seeing in the US and the United Kingdom, and also in places like Italy as well. So our hope there would be that while there is some uncertainty in the Canadian outlook for the early part of 2021, and we do have some of these restrictions in place, that perhaps, that slowdown will be relatively short-lived, and that the prospects for the Canadian economy are still hopeful over the medium term. In fact, if we go to the next slide and kind of look at, again, just focusing on that uncertainty that's likely in the short term, I mentioned an employment decline. The business environment has been difficult. You can see in terms of the red line here that corporate profitability or net income before taxes is declining compared to where we were last year, and that has been a drag in terms of business investment as well. So that, again, is sort of highlighting a slightly unsettled start to the year. If we move to the next slide and kind of look towards the future, there is certainly, I think, some hope. The Central Bank of Canada conducts a survey every 3 months, every quarter, asks businesses many aspects of their business, their employment intentions, their investment intentions. What are their expectations for sales? What were their sales over the past 3 months? What are they expecting over the next 3 to 6 months? You can see that for the last couple of quarters, the blue line here, that businesses are optimistic that we are going to see an improvement in sales. So that's certainly encouraging. And although that hasn't been reflected yet in terms of actual sales, and again, this is across not only the marine industry, but across the entire economy, still some, not quite as strong as the expectations, but at least off the lows in terms of the reported sales that we have seen as well. And we would suggest that if one compares the sort of the consumer sector in Canada relative to the corporate sector or the business sector, it probably is in a healthier position. If we move to the next slide and look at some sort of recent trends that we're seeing in the retail sector or in the household sector more broadly, you can see that in terms of retail sales, the slump, again, the COVID-related slump, has now been fully recovered just in terms of the retail sector, and we're seeing growth in the month of November. Very similar to what we're seeing with overall GDP, sort of monthly increases on a consistent basis over the past 5, 6, 7 months. But I think even more important in terms of this slide is the chart that is being shown on the right, which really highlights some of the important measures that have been taken by the various authorities in Canada, the central bank, and more particularly in this case, the Canadian government, to try and help the economy through the pandemic and to deal with the effects of the restrictions that have been put in place. Now, I'm not sure if your screen is playing up a little bit like mine, but in any case, there's a red line there, and that is household disposable incomes. And as you can see, there was a huge surge or a huge jump in disposable incomes in the middle of 2020. And this had a lot to do with the fiscal support measures or the income support measures of the federal government of Canada, in addition to business support measures and some provincial level measures. So that even though we saw those very large employment declines, household disposable incomes were rising at somewhere in a 10 to 15% pace. So household finances are actually in reasonable shape. And, you know, for a while, there wasn't much ability or less ability, shall we say, to spend through the traditional retail channels, although that consumer spending has started to recover in terms of the blue line. But there is still a very large gap between the income that's being earned or, you know, that is being received by Canadian households and what's being spent. So that does put households in a good position in terms of their purchasing power, in terms of their ability to spend. And, you know, hopefully will be helpful for not only the sort of the retail sector as a whole, but also be a beneficial factor for the marine sector and you know, pleasure craft and boating as well. If we move to the following slide, here we can see sort of the efforts of the Canadian government in terms of the something almost in the region, I think, of 10% of GDP is the fiscal support measures. Now, that's for fiscal year 2021, so that ended in March, or will end in March of this year. Not quite expecting as significant fiscal impulse for the coming year. It's not like the budget sort of spending can remain as impressive as it was last year forever. Nonetheless, in its fall economic update, we did see some potential for additional spending. The Canadian government said that under, you know, certain circumstances, or if required, they would look at another 75 to 100 billion Canadian dollars over the next few years, which I think works out to about a cumulative 3 to 4% of Canada's GDP. So the fiscal support is being pared back, it is being unwound, but it is being unwound at a carefully calibrated pace, at a sort of a measured pace. And so hopefully this will continue to be a supportive factor for the economy. Moving forward to the next slide, of course, what happens here, and I'm sitting in New York City as I speak to you, and what happens here in the United States is still of you know, very significant importance to Canada, one way or another. And as an export destination, the United States does still account for 70% of Canada's total merchandise exports and a very sizable portion of Canada's GDP as well. We do expect a reasonably resilient US economy. We're looking at growth this year after the tough times of 2020. We are looking at 4.5% GDP growth in 2021. We're looking at close to 5% GDP growth in 2022. So, and certainly with the discussion here in the US over the latest budget stimulus package, the $1.9 trillion package that President Biden is trying to pass through the Congress by March, that would be a helpful factor in terms of sustaining growth here in the United States. We don't necessarily think or believe that he'll get that the administration will get every single thing it wants, but we would certainly think that a package of $1 trillion plus here in the United States is more than realistic. So not only is the government support from Canada going to be helpful for the outlook, I think that so long as we continue to see, you know, obviously reasonable growth in the US, that will be supportive as well. I do mention in the title of the slide that there are both opportunities and risks, and of course the US is struggling a little bit more with the COVID outbreak and getting that under control as well. So a little bit more uncertainty and variability around that forecast, but hopeful nonetheless. And just picking up on some of the figures and statistics that we saw earlier from Sarah, if we move to the next slide, and just looking at sort of consumer spending, or just looking at US consumer spending on pleasure boats, we do see quite similar dynamics in terms of that dip in sales in the sort of the March-April period, but then quite a significant spending that we saw on pleasure craft over the latter part of 2020 as well. So The US boating industry, the US consumer interest in the boating industry, also an important factor that we saw over the last year. So I think in total, and if we move to the next slide, I think in total, one would argue that the Canadian economy is in reasonable shape, and it's a reasonable backdrop sort of globally, certainly more hopeful in 2021 than it was in 2020. And in addition to, I think, the fiscal stimulus efforts of the Canadian government, we have talked about foreign demand or global demand picking up. And while the US is right at the front and center of that as far as Canada is concerned, it is clearly more broad-based than that. The Chinese economy is leading the way higher. It was the only major economy to show growth in 2020. Pretty much every other major economy suffered a decline for the full year, whereas China grew a little over 2%. And after being hit for several months, we have seen that trade volumes or export volumes have actually returned to positive territory as well. So the sort of more favorable global backdrop should also hopefully be helpful for the Canadian economy as well. If we move to the next slide, what does this mean for the Central Bank of Canada? What does it mean for inflation? Should we be worried about higher interest rates? I would say the answer is probably not. Inflation in Canada is pretty well behaved. If anything, it's a little bit low. It's supposed to be close to 2% if one looks at either sort of the underlying measures of inflation or the sort of officially reported measure of inflation. We're about 1 to 2%. So that's not so bad. You really only start to get worried about low inflation or deflation when you head below zero and you stay there. And that doesn't really appear to be a significant threat for Canada at this particular point in time. And then if one looks at the sort of where the central bank is, the red line on the right slide here, it shows that the overnight policy interest rate in Canada is at 0.25%. So it's really going nowhere, or it's as close to zero as you can possibly get. The blue line that you see sort of going back and forward are market expectations. Where do we expect to be in 12 months from today? And as you can see, there's really not much expectation for any change as far as those policy interest rates are concerned. So that would also be our expectation. We don't expect that Canadian interest rates, the central bank will raise interest rates either in 2021 or in 2022. So this type of environment should remain in place for the time being. If we go to the next slide. One comment we would make in terms of sort of with this reasonable economic outlook, what is the outlook for the currency, and to the extent that that's relevant for your operations, your involvement in the industry, where might the Canadian currency be going? Well, with the Canadian economy doing reasonably well, and also with the recovery in commodity prices from the lows that we saw in early 2020, we do see a positive impulse for the Canadian currency. In fact, if we look at sort of the blue line here being commodity prices and heavily dominated by oil in this particular instance, you can see it's been moving higher over most of 2020. And the Canadian exchange rate, or the US dollar Canada exchange rate, has also been moving higher. When this red line moves up, it means the Canadian dollar is getting stronger. Now, this is kind of presented the way that we look at it down here in the southern side of the border at a US dollar Canada exchange rate. It's currently at 127. We think it's going to go to 122. As I get older, my math gets poorer and poorer, but we're probably talking there, maybe we're around about 76, 77 US cents Canadian right now, and thinking about getting up to 81 or 82 cents, but we're talking about a 5-cent move in the Canadian currency over the next 12 to 18 months is our outlook. We certainly think that we're probably working with an environment where the Canadian dollar could be expected to strengthen gradually against the US dollar. So I think that largely wraps it up. If we go to the next slide, I believe it's just a summary of our overall forecasts. A lot of numbers here. Let's just focus on the third and fourth columns. If the numbers do come through clearer, The third and fourth columns for 2021 and 2022. The United States, I mentioned, we've got growth 4.6% and 4.8%. Whether you can see it or not, for Canada, in 2021, we've got growth forecast here at Wells Fargo for Canada of 4% this year, followed by 3% next year. Those numbers are actually even probably a little bit on the conservative side, and indeed with the Central Bank of Canada recently publishing their latest sort of monetary policy outlook and updated economic forecast, they're looking for stronger growth in 2022. It does come back to that uncertainty that we're seeing earlier this year, but some of the medium-term factors are favorable, you know, in terms of progress on the vaccine, stronger growth around the rest of the world, and also, you know, looking at sort of the government still providing some fiscal support as well. I think, you know, we could easily see 3.5% to 4% growth, more stronger than what we currently have here. And I think finally, if we just move to the following slide, the very important disclaimer slide that one must always include in all of these types of presentations as well. But with that, I'll wrap up my comments. I hope that has given you some sense of our overall view on the backdrop for the Canadian currency. I'll hand it over to the next speaker and would be happy to take questions either now or later on in the program as you see fit.
Well, thank you, Nick. That was fantastic. It's good to see when our numbers align in some cases. We do have time. If people want to put some questions into the Q&A down below, I will read the questions out to Nick and we'll go from there. They're asking, one person has asked if we'll be able to share the slides, and I believe we can. So we will shrink this down and we'll make them available. And this is being recorded as well. So if anyone wants to rewatch or look at anything in particular, that will be available as well. Okay, I'll wait to see if there's anything else. Guess we did such a great job. There's no questions.
I'll continue to watch, and if anyone comes up with any questions later on, I'll still be here to answer if need be.
Oh, here we've got one question.
Yep.
Can you see any trends in electrical boats in Canada? I don't know if you have any thoughts on that, Nick.
I'm afraid that's probably a little bit below my level of detail and granularity. Unfortunately, we have to take a relatively high level, so I'll defer to you, Sarah, and Jean on that, if you wanted to answer that question.
Well, I think from NMMA's perspective, I mean, we have been engaging with a few electric boat manufacturers that have approached us, interested in membership. So I think there is definitely an opportunity, and it's coming, but I think it's coming slower than perhaps Europe, maybe. I don't know, JF, if you have any other thoughts?
Yeah, no, definitely, Sarah, I echo your comment. There is a lot of interest around EV vehicle overall. For Marine, the biggest challenge is, I think, that what's kind of slowing the process is the technology and the battery, the size, the weight, and so forth, and the demand of power of pushing a boat through the water, and the range and the dependability being on the water. Certain application, it makes a lot of sense. In others, I think the technology is just not there yet, but there's definitely some advanced development going on out there that we could see something in the future, but I wouldn't see that like in short term. Yeah.
We have another question here. It is, who is the marine service industry stats provider? I'm not sure I completely understand the question, but if you're asking about my stats in particular, they are, as I said, on the outboard, and the PwC numbers come from all of the engine manufacturers reporting those numbers to us monthly. So, you know, 99.9% accuracy. Some of the trajectory information and the pie charts that I outlined were from Transport Canada Pleasure Craft licensing information. Now, Nick, I don't know if you can answer, if there's a component for you for that question. Who is the marine service?
Just the the one graphic that I did share was the pleasure craft sales, and that's from the Bureau of Economic Analysis here in the United States, who put together the entire GDP figures, and those numbers are generally fairly credible and fairly robust. So just a national statistical agency for those US numbers.
Okay, there's another question. Do you see any potential of FX spike when government starts to ease off fiscal stimulus?
I would say, FX spike, yes, I mean, there's a possibility. And, one of the risks would be that if the fiscal stimulus, the government support measures, if they were removed too quickly, I think it's important to remove it gradually for there to be a to help support the recovery. And I think one of the worries, one of the concerns would be that if the government's pulled back too quickly, which I think is unlikely, we're in tough times, and it's not like they want to sort of pull the rug out from under us. But if we were to exit these fiscal support measures too quickly, then that's one of the factors that's probably helping to keep sort of market sentiment and overall economies doing well. And so quick exit from budget stimulus, you'd potentially see some concerns in the equity markets, potentially see some concerns in terms of growth sensitive currencies. Canada is most certainly one of those growth sensitive, commodity sensitive currencies. So if we were to remove budget stimulus too quickly, either in Canada or even around the rest of the world, there is potential for some unexpected weakness in the Canadian currency. So I would hope and expect that the sort of relatively gradual transition that the Canadian government has indicated and signaled is a path that they will continue to follow.
That's great. Okay. Next question. What impact will the limited supply of new boats and motors have this year? JF, do you want to take a crack at that one?
Well, yeah, sure. Put me on the spot with that one. That's definitely the concerns of everybody and of our industry in general, among other recreational industry. I think what we need to put in perspective is this surge in demand. Manufacturing is just not capable of ramping up like, 30-40% just like that, right? So that's on top of, the supply chain and looking at, components and vendors and so on and so forth that adds up to the challenge. So like I said earlier in my opening notes there, like we really need to, manage those expectations with consumer. And what we're seeing right now is we're probably 3 to 4 months ahead with sales that we would normally be at retail. So we expect a lot of the product being sold out before spring hitting, and even the product being delivered. So it's definitely will limit the business opportunities and the growth. The other factor that is to play is we started the year with a decent amount of inventory in 2020, where now we're in 2021 and the pipeline is completely dried. So this is adding, to the stress of having a supply. So what we ask is everybody, we need a little bit more patience. We need to be diligent with the way we treat the consumer, and essentially work our way through this, and hoping that when we come out of the pandemic, we maintain, strong volume like this, which I think it's really the takeaway here is, long-term, how do we benefit from this incredible opportunity in a very unfortunate situation. So that'd be my 5 minutes spiel on that one, Sarah.
Nick, do you have any perspective?
No, if you could remind me again of the question, the supply constraints I think you mentioned, correct?
What impact will the limited supply of new boats and motors have this year?
Nothing specific or particularly granular. The only thing I would say is that at least in terms of here in the United States, and to the extent that there is boat manufacturing and stuff going on, with the new administration, there is I think a desire to increase the usage of the Defense Production Act because of the issues we face down here in terms of COVID and retooling a lot of manufacturing plant. Now this more relates to sort of autos and so on and so forth, but I think there's always going to be, I think, some limit on overall supply, because a lot of effort is being directed here in the United States to making sure that whether it's technology, whether it's personal protective equipment, whether it's drugs, that a lot of that manufacturing capacity is really directed towards addressing the COVID crisis first and foremost. So I certainly see that, supply issues, to the extent that they emanate from the United States, will most probably continue.
Right, I agree. The next question is probably for me. Have you done any research into the vacation patterns of Canadian families? Will they stay close to home / cottage rather than travel abroad? And will this impact boat and related purchases and the number of families who will enter the boating market in the short and long term? We have not done any specific research. What I can tell you is that's the trend we're seeing, as everyone is staying closer to home. And, anything out there is, whether it's a snowmobile, an RV, or a boat, people are trying to find things. Those that have jobs still and have disposable income are looking for things to do with their money. As we've seen, at least in the market here in Ontario, that the price of houses outside of the Greater Toronto area and in cottage country are going up, and things are selling within hours of being listed. So people are putting their money in things that they can enjoy close to home. And I think that will stay on for a little while longer through this year. And I think we have an obligation to make sure that, as JF said, that we take care of our new customers so that they stay in boating, and that when the borders are open again in a couple of years, or whenever that might be, and everybody's comfortable traveling again, that we will keep those people who got into boating and not have them sell their boats and move off to, cruising Europe and traveling the world. So hopefully we'll be able to do some research, but at this time it's not easily available. Okay, let's see, moving on. Would you care to comment on your views of what will happen with the US tariff situation with both China and Canada? I can start this off, and then perhaps Nick, if you have any insight. I would say that things are optimistic, and I think moved in the right direction between Canada and the US. I don't see a threat at this time with the new administration. And in fact, former President Trump sort of backing off on attacking or retaliating on Canada again on the second round there in the spring of 2020 showed that he understood at this time, and there was no need for Canada to then put retaliatory tariffs. So I think that's positive. I would say, I do work closely on the international file for North America as well, and I think we're in a good position to start looking at better situation with China. I don't see that that's going to be fixed within the first year, but we are working on it, and definitely communicating with the Biden administration on that piece. I think we have a better opportunity to see the US-EU tariffs removed first than perhaps huge advances with China, and that will be a great opportunity for the US manufacturers in the trade between EU and the US. I don't know if Nick, if you have any perspective.
No, I would concur with your comments. I think sort of tariff issues between the United States and Canada, we don't see those as a concern. We think those issues are probably dissipating. And indeed, even I don't think we're expecting everything to be magically solved between the United States and China overnight in terms of the sort of trade discussions those two countries have had recently. But the way I would phrase it is to say that I think the Biden administration will probably operate through, shall we say, more traditional channels, traditional political channels. And although I don't necessarily believe the Biden administration will be sort of, shall we say, easy, it will be an easy relationship with China. And there will be, I think, human rights issues and some sort of forceful or forthright, conversations on that front. I believe that there'll probably be an ability to compartmentalize sort of the various issues that the two countries face. And so even if there are tensions in some areas between the US and China, be they sort of on human rights or whatever, I find it hard to believe that the trade relations between the US and China would worsen, and if anything, I think they could get better. So I think the chances of any further tariffs escalation between the US and China is probably dissipated, and we might even see a rollback of some of the previous tariffs over time. That's not going to happen anytime soon, though.
Okay, agreed. Okay, we do have a few more questions, and since we're running pretty good on time, we said we'd wrap up at 12:15, so I'll continue on and hopefully answer all the questions. Next question is, are you concerned about the amount of stimulus that the Canadian government and Bank of Canada have engaged in relative to the size of the Canadian economy when compared to other G8 nations have done relative to their economy size? That's for you, Nick.
Yes. With respect to the central bank, I would say no. I mean, there has been a very large increase in the size of the central bank and the purchases of various government bonds. The Central Bank of Canada is now a very significant participant and player in the Canadian financial markets, but it is, I think, still on a par with the likes of probably the United States and probably a little below what we're seeing in the United Kingdom or the Eurozone. So no, I don't see that as particularly problematic. The issue of government stimulus is much more nuanced, and I would be going back to one of the slides that I showed earlier. I'm not saying go back to it, but just bringing it back into your mind or into your memory. Yes, I would be concerned if Canada was running a budget deficit of 18% of GDP over multiple years. But the fact that we're getting back down closer to 6 to 7% reasonably quickly is a helpful sign. I must say that for highly rated sovereigns, believe Canada is still AAA. For highly rated sovereigns and with a sound economy, I think they can run with elevated levels of debt. So I do not see either a sort of shall we say, a crisis in terms of the ability of the Canadian government to finance itself, any kind of worries of the currency. I just don't think that the scope of the activities of the Canadian government, when you compare it to what some other countries have done, is going to be enough to, shall we say, spook the markets or even cause longer term economic difficulties. I think Canada is still on a sustainable path as long as those budget stimulus is gradually removed as the economy improves.
The next question looks like it's for me. Sarah, has there been any updates with regards to pleasure craft licensing as to whether we will see a yearly registration and to where this money will be allocated? If I understand your question, I'll answer it two parts. We're waiting to see what the government will actually proceed with on pleasure craft licensing. Jim Wilgosh, who's our Director of Government Relations, and I met recently with the Minister's office and expressed our concerns that the system needs to be dramatically improved so that we have access to the statistics, good statistics. And we suggested perhaps that a $15 license for 5 years is not going to give them that system, and perhaps this isn't not entirely thought out through about the opportunity that we have before us. And as for money allocated to it, I think they're just planning, if it's Transport Canada's planning on just passing through the cost to pay for the program. I am working almost weekly on making sure that we get improvements to the data that's provided to us. That's why, as I said, we're holding off on releasing anything because we want to make sure we can cross-reference the HIN numbers and ensure there are no duplicates. I suspect we'll see some pretty significant pre-owned market numbers coming out as a result. And Jeff, if I haven't answered your question entirely, give me a call and we'll talk it through. Next question is, does Wells Fargo intend to find a solution for platform financing for European boat import?
That is, I'm not sure if we have any other Wells Fargo representatives on the call, but I'm afraid my area of responsibility, focus, and mandate and expertise is the international economy, so I can't comment on that.
Okay. we'll check with others and see if we can answer that. But the person who asked it is an anonymous attendee. So if you'd like to email me separately and we can have a dialogue, we'll be happy to help. Okay, I think we're almost there. Just checking in on your thoughts on how new sales might shift to resale boats after pandemic, and what timeframes do you think it may be in? JF, what do you think?
Well, I gotta admit with you, Sarah, that I've been doing forecasts every month in 2020, and I don't think one of them was accurate because things change so fast. So it's the reality. But I think you and I have seen some of a glance of draft data, and we see that in 2020, like the used market kind of increased. And I think it's two things. I think it speaks of the new boaters that come in and with a sort of a set in mind budget and the lack of new boats possibly as well when the inventory depleted. In terms of, to answer the question, like what's the trend going to be on that and after pandemic, honestly, I can't really tell you what's going to happen there. I think we've run over the years pretty much 1-to-1 ratio type scenario, and I think that's probably gonna stay very, very close to that if it would be my simple guess at this point. So, but definitely there's a lot of demand for used product at this time.
Agreed. Okay, and I think we have one last question. Actually, no, two. What effects, positive or negative, will the cancellation of the Keystone pipeline have on the Canadian economy, especially Alberta? Over to you, Nick.
Yeah, we haven't assessed that in detail just yet, but clearly, you know, I think a significant negative just in terms of you know, obviously a lot of Canadian oil is routed to the US, and so that's going to impact the capacity, the supply. Maybe it's one of the factors that's, you know, behind our relatively modest near-term outlook. In addition to COVID, some of these uncertainties. I do think, however, I mean, I'm not closely involved, but I do think that President Biden and Prime Minister Trudeau will develop a constructive working relationship, and so although there will be difficulties and problems like the pipeline issue, I still think that the trading relationship and even the sort of commodity trading relationship will be quite good. And so while we will face short-term issues, I'm not concerned that it's going to be a sort of a long-term negative for the Canadian economy.
Okay. All right, and our last question, other than COVID and the slow pace of vaccinations in Canada, do you see any other threats to the growth of the marine industry in Canada? I would start by saying, from a government relations perspective, I'm concerned about the changes to the rental safety checklist. I think that will have a negative impact to our industry. And in the event that we don't proactively together do everything we can to ensure we put people in boats and tell them what they need to know about safety before we send them out there with the keys, we're going to see our industry attacked by perhaps not necessarily thought out through new regulations to protect from incidents and fatalities continuing to grow. So that would be what I see as my biggest risks in aside from COVID. And I'll turn it to the two of you for comments.
From a macroeconomic perspective, probably not significant risks at this particular point in time. You know, one of the focus, or a focus in over the past several years has been high levels of household debt in Canada. You know, and the worries that what if the Bank of Canada were to raise interest rates? You know, could that cause a problem? As we saw in the presentation that I did earlier, it looks like Canadian interest rates to me are going to remain relatively low for an extended period of time. And there were significant government support measures. So although there has been concern about household finances in the past, for right now at least, those concerns are less than they usually are. So just from a macroeconomic kind of perspective, probably not significant risks to the boating industry at this time, more as you mentioned, the industry level type risks.
Yes, Sarah, from my side, same comment as you exactly. It's about, you know, really the safety aspect and having that top of mind as an industry to make sure that that doesn't negatively impact our industry.
Okay, well, I think that wraps it up for Q&As. If anyone thinks of anything else, feel free to email any one of us, and I'll turn it over to JF to close things off.
All right, thanks, Sarah. Nick, big thank you for taking the time to be with us today. Your insight, perspective are extremely valuable to all of us, and we appreciate the support of Wells Fargo's against and what you give to the boating industry, and for the outstanding presentation you've done here. And I'm sure it's helpful to everyone and their businesses here. So with that said, thank you. And this concludes our first and hopefully our last virtual State of the Industry. So I want to thank everybody for being with us today, and everyone stay safe, and looking forward to see you all in face-to-face in person and sometime soon. So take care, and bye now.